Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September 11th. Yes, today is that day that is very hard for most traders, to be quite honest. America as well, but traders in particular, I think. Anyway, I'm here to teach you guys some different option strategies so that you can implement those into your portfolios in the right way. Yeah, anybody can teach you how to build a strategy. I teach you guys how to implement those, all right, to increase your probabilities of success. But please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, really not a whole lot to see here. So let's move it back over here to the United States. We've got core PPI, which is Producer Price Index. This is how much the producers of products are paying for those products, or those inputs, if you will. And we saw it come in at 0.3%, expected to be 0.2%. PPI came in at 0.1%, expected to be unchanged. Also, we got wholesale inventories coming in at 0.2%, which was right in line with expectations there, so not a whole lot to see. And then crude oil inventories. Looks like on the chart we must have had a massive build. Well, no, we actually had a big drawdown of 6.9 million barrels, and that's better than 4 million barrels over than expected, because the expectation was 2.7%, we got 6.9, so much bigger drawdown than what was expected. Also, we have a treasury auction later on today. All right, without further ado, let's get on over to the away from the economic data and into the markets. We've got crude oil, as we mentioned, down by $1.60 right now, just over $1.60. We've got that purple line, you remember, where we were showing it as support and resistance. I don't know that that line really is going to make a big difference anymore. It seems like we've kind of played through that area quite a bit. But the thing to note is yesterday we got that settlement below. We went up, blew through that $58 a barrel mark, which lined up with my Fibonacci extensions there, and then tested even the 38 Fibonacci, all right, and that's based on like a 3-year average there, that or a 3-year chart pattern. We settled below this Fibonacci again, tested it once again this morning and fell away. So there is just not a lot of demand at prices higher to sustain a move into the 60s at this point, and today's confirmation of that little bit of a top really is going to make it look like we are either going to hang out right in and around this point of control right here, the point of control, or we are going to come back down and test this value area low. And I think that we're going to kind of stay within this area here. I think that that's really where the sweet spot is until we get economic data to really say United States is doing well, as is the European region. Right now, we aren't seeing that kind of economic data, especially across the pond. So I think that we can't really sustain higher prices. We also still have the overarching theme that OPEC isn't following through with the mandates that they've set up for themselves. Saudi Arabia being one of them, supplying more oil to the markets than what is mandated by OPEC. So once they start seeing the big dogs overproducing than what they're supposed to on their budgeted allocation, then everybody else starts cheating as well. So that's one of the big things that we see happen over in the OPEC regions, is that once one person doesn't follow through with the mandate, then everybody kind of falls off as well. All right, and partly that has to do with China demanding some oil out of Iraq and Iran, and so Saudi Arabia is trying to keep up with that as well. All right, so we've got crude oil coming off. We've talked about that. Gold is trying to find a little bit of a bottom here. Remember, I played this for the gold futures to be a long and kind of rebound back a little bit just the other day. So I think that that's still intact. Was getting a little bit worried about those puts. I was in the 136 puts, and yesterday we started getting a little bit of acceleration to the downside. Remember when I was setting this chart up, or when I was setting up with this trade, this doji, let's do a line like that, or not that one right there. I don't want that one. I want this doji, yesterday's. My marker is not working out for me. All right, we're just going to go there. That doji there was looking more like a bit like that. All right, so a little bit of a bottoming pattern. And then, you know, I was looking for a confirmation, which is kind of like what this one would have been doing today had we not finished near those lows. So yesterday I was getting a little bit nervous because it was starting to look like a continuation pattern where the overall market was going to want to continue down, which isn't necessarily what I wanted to see. My area of support here, I'm just below that area on the Fibonacci, so I do have support if we were able to break through that, but it looks now like we're starting to get a little bit more momentum built back up with the gold bugs coming in at these levels. All right, bonds. Hopefully you're finding a little bit of a bottom here, because I played this to the upside as well. You know, some people are talking about producer price index showing deflationary aspects, things of that nature. It very well could be, or that we need to start cutting interest rates to kind of get away from that. Today's market action is starting to look a little bit more like we're finding a bottom here. You know, some people could say that this doji as of right now looks like a continuation pattern or a pause, but I think that it coinciding with this Fibonacci that we are looking at, that's going to find a little bit of support here. All right, VIX is coming off because we are seeing the equities higher today. Dow Jones up about 90 points. The E-mini S&Ps are up as well as the NASDAQ here. You can see almost up 70 points. We got a little bit of a sell-off here. That's actually very healthy for the markets when we get this pullback here and start to rebound. I talked about we were going to test this value area high and I believe break above that and test the all-time highs here. Whether it would be this week or next week, it's starting to set up for maybe closer to next week where we start testing those highs. Again, we can see we've broken above the topping area here where we found a little bit of resistance coming into today. We've gotten above that. Now, it's key that we settle above that, I think. We've gotten that little pullback and starting to see some rebound here. Overnight inventory, you can see, was pretty flat. Coming into today's session with the economic data gave people a little bit of hope, and we are starting to rally up and away. So that is a good thing. I haven't added anything. I want to wait, let these things kind of shake out. GLD is working out quite nicely and a couple of other ones. TLT is the one that's a bit of a thorn in my side, but I'm playing out the probabilities right now. We've come down and tested my 141 handle there in TLT. That's been breached. But I'm looking at the probabilities of it just touching it, and we're going to rebound back and away, which is starting to come to fruition there. So I'm going to hold on to that position as well. Haven't made any adjustments, like I said, and haven't added anything at this point. Trying to get out of some ULTA. I'm a little bit far away at this point, but if you remember, I had on the October 195 puts in there that I had sold originally for $1.35. I'm trying to get out right now for 60 cents. It's trading right around 70, so about 10 cents away. It's trading a nickel, so I'm pretty close to the bid at this point. So keep your eye on that one. You might see that trade later on today, and if so, I'll let you guys know about it. All right, that's all I got, and if you can't take it easy.